Welcome to this InsurTech webinar. My name is Oisin Merrins, and I'm the editor of InsurTech Rising. This webinar is part of our InsurTech Rising Live Digital Week. Every day this week, we've been taking on some of the biggest issues facing the insurance industry, bringing you expert discussion via a series of interactive webinars, live Q&As, podcasts, and articles to shed light on the areas most ripe for innovation. You can catch up on all the best bits by Googling InsurTech Rising Digital Week, and do tune in for our final webinar tomorrow, an industry consorting, the state of blockchain in insurance. But today we are talking about whether commercial lines represents the next frontier for InsurTech, and I'm delighted to be joined by Lakshan De Silva, who is partner and CTO at Intellect SEEC. So, unfairly or not, commercial lines are regularly called out as the innovation laggard. But is all of this set to change? Will a new wave of InsurTechs targeting commercial insurance arrive to accelerate the digital transformation of this corner of the industry? Where are the biggest opportunities for innovation? What steps should insurers be taking now to capitalize on emerging technologies? And what challenges are InsurTechs likely to face in trying to crack the commercial nut? So before we get going, I'd like to remind everyone listening that we'll be holding an interactive Q&A after the discussion with Lakshan. If you have any questions during the presentation, do feel free to send them through. No need to wait until we've reached the Q&A session of the webinar. So with all of that out of the way, I'd like to ask Lakshan, are commercial lines lagging behind in terms of InsurTech innovation? And if so, why?
Thanks very much, Oisin. And I'm going to sort of caveat some of my answers. I'm always going to have a little bit of a tech bias as a CTO, so please bear with me on some of this. And there are a lot of InsurTechs, and you're right in terms of most of them seem to be attacking personal lines. And I don't think this is an insurance-specific phenomenon. And if you see these sort of the startups that are emerging, the primary metric on sort of the early rounds of how they're funded is around growth. And that is a lot easier to show on personal lines than in commercial lines, is sort of the higher volumes of transactions. Now, what's going to be interesting is as they grow, is the motive change from growth to profit. So I'm keen to kind of see how these InsurTechs handle sort of the loss ratio performance in the latter stages of funding. So I think growth is a big factor in attacking personal lines. The second area I can see the reason for this is, especially in commercial, the ease of doing business angle, which the lever which a lot of the personal lines InsurTechs are pulling is not as doesn't give the best returns. For example, a nice funky UI with a digital broker doesn't necessarily mean an increase in throughput and increase in coverage. You know, the fundamental product structure is still very complex. It's anything but a commodity. And until that underlying problem, we're kind of distribution problem alone cannot solve that. So I don't think using a better user experience is an easy one is a valid lever in commercial. It's important, but it's not the most important. Thirdly, I see a bit of a phenomenon happening on commercial, and that is, what do you need to learn up front from a customer, and what do you want to learn throughout the life of a customer? And this is, I don't see this as just by the different lines of business on commercial, but by the business types. So if you imagine an InsurTech targeting a manufacturer's package policy, now imagine that combination in construction, mining, architects, engineers. It's quite mind-blowing. So you'll probably see a lot of new commercial InsurTechs targeting by business type, by the packages, as opposed to the sort of the traditional line of business. And that combination is quite a daunting task. I mean, I think there's some really good news here in that I believe that sort of commercial IoE, like Internet of Everything, and sensor-based data that you can provide in commercial is way ahead. So I don't see any technology barriers. And I think, this is why I think even though there's not as many commercial insurance startups in InsurTech, I believe the actual unicorn of InsurTech will come out of commercial. I think they're the best place to solve the underlying loss ratio problems due to sort of the maturity of the IOE frameworks and the IOE ecosystem that's already prevalent within, especially in industrial automation. So yeah, I see those three main reasons, but I'm very hopeful that the unicorn will come out of commercial.
Well, we'll just have to wait and see on that front. So which lines within commercial are most open to being disrupted in your view then?
And like I'm curious about all this. I'm very careful of the word disruption, and I want to sort of caveat this on where I see disruption and how I kind of define it. My general rule of thumb on disruption here is that it's a continuum from digitization, and it's not something you can. It's not a linear forecasting model where you can just work out, hey, we're about to disrupt someone. I also see, as I said, kind of mentioned before, it's not going to be via, what is the line of business per se. There's going to be a lot of by business types, and I think the big one will be cyber. I think, which I think will turn into sort of what property is now. Cyber will be in 5 years' time. I think the second part in this, before I kind of answer this, is I firmly believe that disruption is a function of real of application and successful adoption of exponential technology, things that are like rapidly moving but not well understood, like in the machine learning aspects, the Internet of Everything, the augmented reality side, quantum computing, and the application of that. And I also believe this will it's not like a 2-year horizon. It's in the 2 to 7 year horizon. So in noting those factors, I really see workers as interestingly, as boring as it may sound, the ability to have like preventative safety management in workers has amazing social impact as well. And I see this in a number of aspects. I see the ability to solve things like handling moving equipment, the autonomizing of cars. So on a level 5 autonomous vehicles has a big impact on moving equipment. And you'll probably find that even on the small companies, things like repetitive motion issues can be solved. Other issues like arthritis, other issues where you come into by gait sensors, electrical shock by electrical field detection. These are all very easy to prevent. Now, where I think this kind of the IOE part with machine learning to identify systematic problems in safety has a massive change to workers and the subsequent changes that will enable in labor markets. I read something like there's $84 billion spent on safety without having proven and improvement in safety. That's crazy. And I think even sort of a combination of what will become workers in the future, where we start to blur the boundaries between workers' comp and wellness. And I think we've already seen some evidence where the stress levels and financial pressures and bad eating, sleeping, and fitness are leading to workplace safety issues. So I think workers is one area. And property and building, I mean, this is kind of like an obvious answer, but I don't see this open to disruption in the way I think people kind of traditionally saying, hey, get a lot of data, put it through a machine learning system and find signal. I don't see it that way. I see the potential of what satellite imagery and the changes in and some of the drone feeds can do, especially with the processing on convolutional neural networks. combining that with structured data, really starts to change more, not so much the modeling of property but more things like where you have like site surveys, sort of the replacement cost side. Now, where I think the disruption will happen is where the sort of the traditional surveyed market, identifying abandoned warehouses, some of the logistics areas, that area is very prone to disruption within property. And I think even, if you start to look at the other area I think we start to kind of broadly move into here is, I think, marine. Now, this may seem a little bit unusual, but I really see sort of 3D printing impacting marine. And this is not so much in the pure sort of a commercial space, but even the Lloyd space. Now, if you look at like manufacturers like Nike have already said they want to be a software company licensing designs. Now, what does that do to marine logistics markets? That's a massive change in markets, and that is a sort of a 30-year-old technology impacting a market 30 years later. Now, I've kind of left commercial auto out because I don't see commercial auto. I see commercial auto as the biggest opportunity in commercial insurance to disrupt personal lines. And I see the sort of the autonomous vehicles, maybe not a level 5 autonomous vehicle, but I see that this is a major opportunity for, especially in the trucking, long-haul trucking industry. Our current questions on vehicle schedule, driver schedule, history, what hazards are they carrying? That will kind of seem to be a little bit useless in terms of sort of the questions we're going to start to ask on the sort of a commercial trucking industry. And I see this as a big opportunity, and I don't see this easily being given up by the industry. I think there will be sort of manufacturer-based insurance coming into this. But I do see some major understanding gaps in the industry. For example, I think we still don't know what one of these trucks will do in a lose-lose situation. There's ethical algorithms underneath it. What would happen in a, will they hit a small kid or will they hit a barrier? Those sort of understanding on the decision-making on commercial auto is not well understood, but I see that as an opportunity. So just to sum it up, I see workers as a major opportunity, property on the replacement side, marine purely because the fact that I think the shipping and logistics networks will start to move to more local than sort of geographically moving products. And I see commercial auto as a major opportunity for commercial.
Thanks, Lakshan. Really interesting overview of where the potential is around commercial lines. I, in particular, hadn't heard anything around kind of shipping and logistics networks being kind of profoundly impacted by 3D printing and the kind of knock-on effect that would have on marine insurance. So thank you for that. But so what are the biggest opportunities for innovation, and how mature are the technologies that underpin them?
I think maybe a kind of it's probably best to look at this more from sort of insurance value chain. So probably like everyone else, if you start to look at products, distribution, claims, albeit quite a boring way of looking at it, it's probably the best way. And I also try and look at the opportunity to look at the fundamental restructuring of loss ratio, as opposed to improving distribution as the way to go. As I said, the improvement in loss ratio makes a major difference to society, as opposed to just distributing bad products. So I see the area here as the personalized product. The personalized product is really about that ultimate, the major fundamental building block of insurance, risk pooling. And I know that has got some regulatory hurdles and we'll kind of look at that maybe a bit later. But the fundamental pool of one is kind of looking at exactly the company in question, as opposed to someone like the company. really turns insurance on its head. So even there's a real innovation at a product and actuarial level by getting some of what we can learn up front and what we can learn through the life of the policy with the subsequent sort of the motivations to sort of reduce premiums and increase safety. Really makes a big difference. I think that personalized product area has got a huge opportunity, especially if you can start to incorporate some of the publicly available data, even some of the private data through some of the structured sources. What we can mine from unstructured sources, images, social media, and then combine that with some of the traditional factors, the company ratings, location, credit scores. And I really see, in terms of maturity on this is really this is kind of proven technology. This is like now 4 or 5 years old. This can be deployed right now, and the real question is, do you want to now do it in a sort of a batch mode? Do you want to put this out in small commercial or medium middle market and do it real time, or do you want to do it in a batch mode? That's really more the question. I think in the last 12 months, real time big data, streaming big data, and processing Internet of Everything is really becoming a reality. But I still don't see that. I see that personalized product is still is a big improvement, but without really solving that in conjunction with like a full IOE solution, or even a simple IOE solution, it's only a partial win. And I think if you look at a full IOE solution where you do integrate into the companies and you use some of the IOE protocols, I think Zigbee and Thread technology is now very good at sort of interconnectivity. The security is very sound. It's at least 10 years old. Industrial automation has been doing this for 20 plus years. It's only insurance are currently understanding this. It's now, the good news is this is now at a price point which you don't need the large mining and manufacturing industry only to get this, get data from cutting machines, heating, cooling equipment, cranes, thermal cameras. This is readily available and has been solved in industrial automation. The good news is this is now getting available to the retail sector. And combining that, you can really start to make a personalized product. And what does this massive data lake really mean to commercial? Even at the simpler end, deploying something to create a personalized product by simply sort of deploying an app to manage your safety, get safety data ahead of time, just using your phone. That's a simple solution that can be done right now. Just using very basic computer vision, getting information on medically treated industry, lost time events. That's here and now. And I think sort of the beacon data is quite an encompassing beacon data, but this is to create personalized products is something that can be done now. Now, I do see barriers here. It's not like, hey, let's just go and get this data. I think the regulatory framework, especially when you start to get this data and make runtime decisions using machine learning, is not a straightforward aspect. I think a regulator would have a hard time understanding when the data is unknown. It's on the fly. The rates are on the fly. The decisions on the fly. The auditability of this is a nightmare. And I think there's a big role for the regulators and the legal fraternity to play to kind of solve the personalized product. And the final sort of technology piece, I think, is a few years away, is more the smart contract on the blockchain. And I firmly believe this will come into insurance, both on the policy and the claim side, and really change the concept of what a core system is. And we'll try, automatic payment of claims, parametric claims based on the blockchain will be a norm. And then you'll probably see things like the concept of subrogation kind of disappearing when sort of the smart claims come in through the blockchain. I think that the fundamentals of a personalized product is important. The other area I see changing is the distribution side, and I think he is more on what's affectionately known as the chatbot, right? I think the chatbot here is the second lever as opposed to the personalized product, and I see this at the moment. If you see the play done by the personalized chatbots, this is really, I see this as an exponential technology currently at about a 30% strike rate. And I don't see the chatbot at the UI is really the real IP here. And I think the key thing is insurers in a conversational distribution manner have to be readily available, readily thinking about playing across all the conversational areas, whether it be Siri, Alexa, Google, Cortana, whether it's message-based. They need to be. It is quite. It's going to be the norm where your front-facing chatbot may not be the chatbot people use. It'll be plugging into Alexa. It's plugging into a Google Assistant. Now, what this means to sort of conversational-based distribution is the fact that the real IP starts to move not from how good your UI is, but how good your machine learning algorithm is on language of business and the language of insurance. Again, this is becomes not so much a UI chatbot, but again a machine learning aspect. How do you understand language? How do you understand nuances? So the real concentration here is more on the recurrent neural network side, as opposed to the front end of a chatbot. And I think the final area is more around the claims experience. And fraud is the sort of external fraud detection, very similar to how the underwriting using machine learning would work. And I see an opportunity sort of bringing in the equivalent of like a digital polygraph, looking at computer vision. And I know a couple of the InsurTechs already recording your face while you're putting in a claim, but that's more from a behavioral psychology aspect as opposed to a pure tech aspect. So I think ability to create and use some of the technology that you probably see from Snapchat, putting a face of a dog on you, really can be repurposed to do more intrusive checks on claims. And again, it is more the technology here is really the neural network side and computer vision side. You see, at least on a two-dimensional basis, 2D sensing being an important piece as part of this. So I see there's three areas with the personalized product as being the key indicator, sort of, and the key innovation aspect here.
Thanks, Lakshan. A lot of questions coming in. So before I put a final question to you, do keep sending them in, everybody listening. There's some really good ones coming in. But Lakshan, so kind of building on what you said around some of the technologies that are maturing and will have an impact. There's a lot of hype around AI that is, over time, sometimes giving way to failure. Why are things different this time? I think you're right. There is no empirical evidence from the past to say this is going to work, and I think AI has had a few false starts, and even I think there's at least 3 false starts. We had sort of since 56. We've had sort of the false dawn on language. The first sort of translation work failed. The second one, and it's very important to understand why it failed, because this is informing why it's working now. And the second one, I think there's some progress made. I think was called the 70s, the concept of micro worlds, where you took a real world and put it into lab conditions,
and I'm kind of going to trying to thread this together and why it's working. And the third sort of phase was on the expert systems in the 80s, and where you would using insurance, but you would train a system based on an underwriter. Like they tried to teach on doctors and teachers. Now, each of those methods failed, but they did inform what is actually working now. And I think the big breakthrough here happened in sort of 2012, sort of the ImageNet challenge on the deep learning side. And this is a mathematical issue on neural networks not spanning more than 4 layers at that time. And the approach to deep learning is and it's quite daunting for insurance and quite daunting for a lot of people. The approach on using and mining on neural networks is really domain agnostic. So typically, you would train it on if you would train it on the best underwriter, the best claims. It's actually quite the opposite. You just train it on data. You need as much wrong information and as much right information in to do it. And if you see, just use a parallel example, that AlphaGo win, the moves the AlphaGo made were very different to what a traditional player made. In fact, some of them seemed so silly that they were laughed at, but they won. And this is the fundamental thing on deep learning, is that it is a game of, it's not a domain game at all. It's a pure data game. And the collection of data, and even alternative data. You may be looking at environmental data for cyber. And that could be the pattern on it. So I think deep learning is a big reason why it's working, and that not relying on the domain and relying on data is a big change in, and it means a lot to insurance. And you'll see some of the InsurTechs is now are starting off without a chief underwriting officer, starting off without a chief claims officer. It's basically legal and insurance, legal and tech are the foundational formations of InsurTech, not claims and underwriting. And that combination is going to be the norm, because you find the tech guys cannot handle the nuances of the regulatory and legal framework, but pretty much can handle the data. The mathematics can be handled. And the second thing is obviously the data side, and if machine learning is the engine, the data is the fuel, and that is I think we're just scratching the surface of what's most of the systems have been based around getting external data through public sources. I think once we turbo power this with the Internet of Everything and the sensor data, which is the processing of this data is very different to how you process the static text-based data. That will really make another big change to the current sort of the early stage work that has been done on deep learning. And I think the final thing is, I think a lot of the guys who worked in machine learning, whether it's in insurance or not, know this, is the sort of what has been provided by sort of the GPUs, the computational power that has been available and easily available now to anyone. Whether what a small startup has is exactly what IBM or a Travelers or anyone else has. They're the exact same ability to scale, and now kind of moving to sort of real time. So that computational power is not so much, how fast do I process data? It's more how fast do you train? How do you handle some of the parallel streaming capabilities? That, underneath the hood is really starting to change sort of the trained data set, how quickly you can get there without having to use experts. And I'm kind of I really see there's sort of those are the three major reasons, and I think we've kind of put in commercial and even other, we put some artificial barriers to ourselves. things like not adopting cloud technology is going to be a major hindrance if you want to play in sort of the InsurTech machine learning world. You're not going to. It's a completely separate thing to like working on a core system or a mainframe. So I see those as the main reasons why deep learning. I see the data, especially internet, sort of the Internet of Everything, and I see the training of the data through some of the computational methods available is being the biggest change in sort of why AI will succeed this time around.
Interesting. Thank you, Lakshan. So we have a question kind of building on really everything what you've said throughout the conversation so far. Someone has asked, if you owned a top 5 commercial insurer offering the usual set of products, what 3 to 5 actions would you take over the next 12 months, from investment decisions to InsurTech strategy?
Sorry, I missed the first part of the question, Ocean. What size?
If you owned a top 5 commercial insurer offering the usual set of products, what 3 to 5 actions would you take over the next 12 months, from investment decisions to InsurTech strategy?
Excellent question, and I think the immediate one is especially the budgeting cycle. I think this norm of commercial and insurance spending 3% of gross or net is not really sustainable in this current market. InsurTechs will be spending 30-40% of premium on tech, and I think that first of all, that fundamental premise on your CFO measuring insurance by how little you spend on tech has to disappear. The next one I think is you, in terms of to identify patterns, correlations, you need to collect the data. You're not going to magically find a signal 5 years on by starting a project 4 years from now and say, let's go find some signals. That data has to be dumped right now. Your digital footprint on all your on all the carriers, that has to be your data mining side has to happen now in order to find these signals. I would also start to look at the sort of the way this data science talent is acquired. I think this is not just a data science game. I think a lot of top 5 carriers have invested heavily in data science, and I think they struggle to move out of POC stage, and this is mainly because in order to commercialize data science, you need big data engineering, and that's a completely different skill set that comes into it. This is what, if you look inside a Facebook, a Google, and even sort of some of the smaller companies, they're paired. It's a data science and a big data engineer working together. So I think the talent structure has to change and where they sit in the insurance company. So the financials is a major change. It's a major hindrance to budgeting, and the data dumping will have to happen. This is a major mindset change too. The business case model of what used to be this 3 to 5 year investment. Like, look, let's face it, there's hardly any insurance programs that have actually met their business case, especially in the bigger ones. So without trying to kind of pretend it's met the business case, let's just see for what it is and start to get some of this data, I think, immediately. Otherwise, it's going to be too late.
Thanks, Lakshan. We've got another one here around the topic of risk pooling. And I know that we kind of had a conversation earlier around how this is a really interesting topic for people at the moment. So will the pure personalized product for the risk pool of one fully connected insurance buyers lead to greater numbers of uninsurable parts of our economies or society? And can insurance still claim to be a society-bettering mechanism if this happens? What are your thoughts on that one?
Oh, great! That's a great question, and I think what will happen is maybe upfront they may be uninsurable, but by getting some of the IoT data, if it really starts to improve the safety aspects, especially. So, for example, if you look at, I've seen insurance like surveyors saying, and audits saying, put guards up, make sure there's barriers. Now, if you start to prove that over time, what you might say is, hey, we'll charge you more at the start, but we'll charge you less later on. I think that's this flat 12-month policy concept will have to disappear. And yes, you will be able to get more good risk and improve risk over time. And yes, I think it's quite likely you may be getting a lot of uninsurables up front, but you'll likely be able to increase lower the risk profile of most people in order to actually insure them. And this is where I think insurance will move into is a preventative game than a pricing game.
Thanks, Lakshan. I think maybe we probably have time for one last question. So here we have one here. On a more personal note, which InsurTech offering, and this probably builds quite nicely on the previous question, which InsurTech offering in the commercial lines do you see providing a greater benefit to society?
I absolutely see workers. I think workplace safety and sort of the wellness side, sort of the healthy, wealthy, wise type, will have the biggest long-term benefits. And I would say, I would say increasing workplace safety has got a massive ripple effect on society, both in the longevity side, in productivity, behavior. I don't know how well it's modeled, and it's very much an economic model more than an insurance model. And I think that would be the big one for us to really work on as an industry.
Absolutely, and kind of what you said earlier, it's one of the areas that you think is most open to innovation, so we'll have to be watching that space. So that's all we have time for, I'm afraid. Thanks for joining us, Lakshan. We're really excited about seeing you again at InsurTech Rising from the 16th to the 18th of October at the Business Design Centre in London, where we'll be discussing commercial lines innovation in a little more depth, as well as showcasing some of the InsurTechs who are taking a stab at this corner of the industry. So not only can you get a reduced price on your ticket if you book by Friday, the 23rd of June, which is tomorrow, but you can also get a further 10% off using the code InsurTech Rising Live. If you have any feedback on today's webinar or any recommendations for future webinars, please do complete our short survey at the end of this session. It should flash up on your screen shortly. Thanks again, Lakshan, and everybody for listening, and goodbye.